She grew up in a booming Iran where women held high-profile positions, only to see her country overthrown while she was away studying at Oxford, watching from a distance what happens when political reform doesn't keep pace with economic growth. Afsaneh Beschloss studied to be an economist, believing she'd spend her life working to help emerging markets develop. But instead, she's gone back and forth between the private and public sectors, as a banker at JP Morgan, as treasurer of the World Bank, and as Carlyle's 12th partner founding its asset management business. Now she's created her own firm. The RockCreek Group marries Beschloss' deep understanding of markets and investing with her passion for development, pursuing diversity and environmental reform not just because it's right, but to earn higher returns. On this edition of Bloomberg Big Decisions, Afsaneh Beschloss. Afsaneh Beschloss, welcome to Bloomberg Big Decisions. Great to have you here.
It's great to be here, David.
So you started out life in Iran under the Shah and really lived your early years there. What is left of that experience for you as you go through life?
Really, two or three really interesting things. One is I grew up in an Iran that was very, very fast growing. It was sort of post in the 70s, and when oil prices had gone up, unfortunately for the rest of the world, but Iran had plenty of resources, and everywhere you saw a crane. It's sort of the same experience China had much, much later. And secondly, the other thing that is interesting is at that time, there were lots of women who were ministers, women in parliament, women academics, doctors. So as I grew up in Iran as one of three daughters to my parents, anything was possible.
So you saw, as a young girl in Iran, really, women in leadership roles.
Absolutely, absolutely. And I went to the international school in Tehran, which also, given its name, made me be very comfortable with lots of diversity. So it wasn't just diversity of the people that I grew up with in Iran, but also people from all over the world with very different backgrounds and very different circumstances.
Your father was an academic.
Yes.
Did that, from an early stage, make you interested in studying?
I think the one thing that was the most important thing in our household was education. My father was in education. A lot of our family was in education. My mother thought that no one could take away your education. So as it turned out, she was right. If you have a revolution in your country, no one can take away your education. They can take everything else away.
Let's talk about the revolution, because I believe you'd gone to Oxford pursuing an education by then, by the time the Shah fell.
Yes.
What was it like to be away from your country when that turmoil was going on?
Two things. One is, it so happened when I was at Oxford, I was studying economics, but my college also had a Middle East center. So I was also learning a lot about the history and economics of the Middle East just on the side, outside of my classes, which was very interesting. So in a way, I was learning more about the region I had grown up in, very differently than what I had experienced growing up. The second thing is that when you are seeing your country that, wherever you come from, is on a very, very big growth trajectory, but maybe politically it's not moving towards a democratic system fast enough, how fast it can derail. There was no way any of us could have imagined how fast Iran got derailed and moved in a very, very different direction.
You studied economics, as you
Yes.
say, at Oxford, and you taught some at Oxford as well.
Yes.
But then you decided to become a banker. You went
Yes.
to JP Morgan. Did you always want to be a banker?
No, actually, having come from an education family, the idea was that I would go into that profession and maybe do some economic development if I got back to go to Iran. So I got two job offers. One was to go teach at Vassar. One was to go to JP Morgan. And I said, I know nothing about the world of finance, and studying economics at Oxford is very theoretical. So I'm going to go learn how actually the economics I've learned gets applied in the real world. So that's how I ended up at JP Morgan, which was one of the best things I could have done.
Your academic economics informed what you did as a banker. Did what you learned as a banker inform your view of economics as well? Did it change your view of economics? Absolutely.
Both when I was at JP Morgan and later on when I was on the World Bank's trading floor, it was really interesting because the economics that you learn at school, First of all, you end up learning, using just a fraction of what you learned, like in every other subject. But more importantly, I realized that markets move in a very different way than what theoretical economics would have you think. And I think that was really, really useful, both at JP Morgan and later in trading.
You had a good experience at JP Morgan.
Yes, excellent.
And then you decided, as you just mentioned, to go to the World Bank.
Yes.
That's going very much from the private sector to very much the public sector. Was that a big transition? Why did you make it?
So, as I said, when I studied economics, the idea was that I would apply to economic development, helping countries that are less developed do better, starting with Iran. Obviously, we had the revolution, and that was not possible. So the World Bank was sort of, for me, the new home that I could go, where I could really experiment with that.
Is what you did at the World Bank in the early days similar to what you did, the subject matter, to what you did at JP Morgan? Did you stay within the same subject matter area?
Similar and different. When I was at JP Morgan, it so happened I had done a lot of work on energy. One of my professors at Oxford had started something called the Energy Institute, which brought all the CEOs of energy companies and the head of OPEC and the sort of big academics together to talk about things. So when I went to JP Morgan, they did get me to work on big energy companies, sort of, again, pre-M&A work.
It cannot be a coincidence that you came from childhood in a rapidly growing Iran driven by oil and energy. Then you studied oil and energy at Oxford, then you worked on it at JP Morgan, and then you worked at World Bank. It seems to fit together.
It does, but as you said, I had not thought of it that way. I think it was just sort of a natural progression. And at the time when I joined the energy department at the World Bank, I joined as a young professional, which was a 25-person program that came into the bank quite competitively. And I ended up being where it was most dynamic. I think what was always appealing to me was where I could do something that was useful, but also where the circumstances were more exciting, and you could do more.
And then you went from treasurer of the World Bank,
Yes.
a very big job,
Yes.
back to the private sector, to Carlyle,
Yes.
in private equity. Was that because you missed sort of really getting involved in specific projects and specific investment decisions as opposed to trading and being more abstract?
Well, when I was at the bank, it was not just trading. We invested across everything. So we had about $100 billion that we invested, and that was in equities, bonds, private equity, venture. We were really early in venture. But what I realized is that working in an organization with 10,000 people and running a huge group was very different than doing something entrepreneurial. And I had always loved doing entrepreneurial work, starting something from scratch.
Who approached whom? Did you approach David Rubenstein, or did David Rubenstein approach you about going to Carlyle?
My version is David approached me.
Well, then we'll stick with that one.
Yes.
And what was his pitch? What did he ask you?
I think David was building, at that time, one of the largest, most sophisticated, more global firms in private equity. And he wanted the firm to have broader investment areas in addition to private equity and venture, which he and his team had started. So he asked me to become the 12th partner, I think the 12th or 13th partner, something like that, so that I could start Carlyle Asset Management to invest in other areas outside of private equity and venture.
How did you square that experience with the mission that you'd sought at the World Bank? It's a very different organization.
So that was my hardest adjustment, going from the public sector after 20 years of working in the public sector to the private sector. The job was exciting. I was learning a lot. Hopefully I was contributing a lot. But that mission orientation is the hardest part. I think if I think about that, that has always been sort of the conflict for me in my different jobs. I think the interesting thing at Carlyle was that while Carlyle was doing private equity mainly as its main line of business, it had a very good culture, it had a very ethical culture, and it had a really good way of creating new companies, which was different than some other private equity companies.
Could you participate in projects at Carlyle that you felt were really making a difference for the good?
Being able to help the pension funds and the endowments to have higher returns through finding good alternatives to invest was great. So that part of it was mission-oriented, because if you could invest with a higher return in good projects for pension funds and university endowments, and their returns would allow them to pay their pensions or build all the buildings they needed or educate the students, that part of it was incredibly satisfying.
What about diversity? Having women on boards, having women in senior corporate positions, having people of color in those positions.
What we're finding is, in fact, in emerging markets, you're finding a lot of women going into, particularly in Asia, into these areas, much more than in the US.
RockCreek.
Yes.
How would you describe the mission of RockCreek today?
So at RockCreek, we invest using innovation and technology and data in emerging markets and in what we call multi-asset class portfolios to generate the highest returns. We invest in hedge funds, we invest in private equity, in venture, early seed, and as well as in equities and bonds. And we have our own funds, and we invest in external funds as well. What is very interesting at RockCreek is from day one, we created a database, and this is one of the things I learned in my previous jobs, is often a lot of information walks out with people when they leave. So at RockCreek, everything that we do is in our technology, and that's the way we started the company, and that's something that we did from day one.
You particularly focus on emerging markets.
We do a lot in emerging markets.
Emerging markets, maybe more than other markets, are really susceptible to geopolitical forces.
Absolutely.
How do you factor that into your investment decisions?
So there's geopolitics today everywhere, no matter where you're investing. Emerging markets, obviously, volatility has been higher, more change in terms of politics and economic systems. So it is something that you have to incorporate. So when you're doing your risk management, not only are you looking at market risk and other kinds of risks, but you have to add the geopolitical risk as an important dimension. Obviously, having worked at the World Bank, it's something that many of us who are at RockCreek have a lot of experience looking at that and turning that into a way that you can measure. We also are very fortunate we have great advisors in our advisory board who also have been long-term investors, but also thinkers in the broader finance world. And they are extremely helpful with us. Last but not least, we work with local groups inside the emerging markets. We find the best teams to work together. And no matter what kind of intelligence and experience we have in our team, it never competes with somebody who's sitting on the ground. And we find that when we put this together, it's quite powerful.
You've said that the role of data is very important in your company. You also have had a mission through your career to also sort of serve a greater good. How does that factor in, if at all, into RockCreek?
This data has become a monster at RockCreek. So we have data on a lot of investment opportunities. And I think two of the things that we do at RockCreek are particularly interesting. One is data on impactful and ESG type investments. We have a long history of investing in those areas, but also a very large database. Second is information on diverse firms. RockCreek obviously itself has a lot of diversity, and some say it's the largest woman-founded investment firm, but if you go to the whole investment world and in finance, diversity is not one of its strong points. We happen to have also a large database of investable, diverse opportunities. And we have ourselves invested in, since our inception, over $4 billion in firms that were started by diverse individuals, founders, or managed by them, and women.
Yeah, I learned in business a long time ago, if you can't measure it, you can't manage it.
Yes.
So are you measuring diversity for your investments? How do you do that?
So in two ways. One is very simple. Are there, let's say, women working in the firm or having major ownership Are they among the highest paid individuals? Similarly, with diverse populations of African American, Hispanic, and other diverse populations, we do the same thing.
So whether it's ESG, environmental social governance, on the one hand, or diversity on the other, are you doing this to get the best return, or are you doing this to do good in the world?
Absolutely, for better returns. I think one thing I'm excited, it so happens today, doing good actually will get you the best returns. The reason for that is that if we're investing today, we have to look at long-term value creation. So a company that has good governance, a company that is gender diverse, a company that is got good risk management and is not investing in areas that are going out of fashion, out of where the millennials will not be buying their goods, is not a good company to invest in, and vice versa. So you're looking for companies that are the best, and that's what we're doing.
What about diversity? Having women on boards, having women in senior corporate positions, having people of color in those positions.
Yes.
Again, we hear that companies tend to do better as they become more diverse, and yet they don't. What's wrong there? Why don't they want to make them more money by having a more diverse board, a more diverse C-suite?
I think everyone is comfortable with what they are used to. I think you asked me why, my experience was different. I was growing up in a place that was changing very fast. So change was my normal. If you're used to growing up in one way and running a company in one way, it's very hard to make changes. And what we're finding is, in fact, in emerging markets where things are not formed yet, where the banking system is getting formed, where boards are new concepts, where there are not a lot of men in private equity or in venture, you're finding a lot of women going into, particularly in Asia, into these areas, much more than in the US, where the relationships are very established and much harder to break.
How does the rise of China, and for that matter, what appears now to be a chronic trade dispute between the United States and China, how does it affect your investment decisions?
China was so smart to take advantage of all the trade laws that were written.
The investment climate has changed quite a bit during your career. And just take the last 10 years or so. One of the big changes after the great financial crisis was the huge infusion of capital from the central banks. Has that injected governments, at least through their central banks, much more in the private market than has ever been seen before?
Absolutely. That was historically unprecedented, the amount of capital that the governments all over the world injected into the financial system. What also it created is not only that unprecedented experience, but now we're at a place where a quarter point up or down is making huge psychological impact on markets. A lot of the investment and finance new generation that has been in this world for the last 10 years has been living in a zero interest, in Europe, negative interest, in Japan, negative interest, in the US, very low interest rates. And so all of a sudden, interest rates going up from 2 to 2.25 or something in that region becomes very shocking or impactful. So we have created a situation that in some ways is safer, but in some ways could create more volatility.
Well, more volatility, but could it also create more bad decisions?
Absolutely.
There was a discipline of the cost of capital in a business 10 years ago, 20 years ago, that I'm not sure is there anymore.
No, because capital is now very available. And now we're seeing, and the danger also is that, for example, in venture, where a lot of, and seeding new companies, that is one of our biggest strengths in the US, where we are very innovative, where we create new companies and get them to grow very fast. That's a good thing. And having capital available to do that is wonderful too. The issue that is going on today is that because so much capital is going on, whether it is in the US or in Asia, the danger there is that a lot of companies that have no profitability but will not also be profitable in 10 years, and especially if we have a downturn from here, will really get hurt or not exist are getting funding today. So that is very dangerous.
With the central banks, the Fed, the ECB, Bank of England, Bank of Japan, so much involved with the marketplace these days, is it inevitable that they will become more political?
They have become incredibly powerful, as you said. And what is really interesting is that Federal Reserve or the Bank of England or the ECB traditionally were often run by economists or people with very, very strong economic strength. Today, as we're looking at the new leadership, let's say at ECB, fabulous decision. At the same time, we're getting leaders here in the US at the Federal Reserve and leaders in Europe who are not just coming from economics, but they have had political experience in their various jobs. So they're more attuned to the interactions between politics and economics. Big question is how attuned. The worrisome thing also is all the other countries that followed our system to make their central banks independent of the political process are now looking at us. And you're seeing in Turkey, in India, in China, where the reason their economy grows so much was that they sort of let the economy be free of their politics. And now politics is entering more and more into not just the decision making on interest rates, which we saw this week, but also more the broader economy. And I think those are not good decisions.
How does the rise of China, and for that matter, what appears now to be a chronic trade dispute between the United States and China, how does it affect your investment decisions? Does it?
It does. It's almost one of the most important things that we look at. When I taught international trade, it was a theory of comparative trade. And what has happened is basically China was so smart to take advantage of all the trade laws that were written and WTO once it joined the WTO, not just to grow in an unprecedented way, but also to take advantage of it to create an industrial complex that killed the industry in many other countries. Smaller countries, so it's not just, I think the trade issue that President Trump has referred to and is one unifying subject, I think, in the rest of the world is a fact, in the sense that China wants to run the world trade in its way. So that is not something that can go on. Because it's not just the US or Germany or the rest of Europe that is not comfortable, but every small emerging market country that has had its industry or its areas that they had comparative advantage, if we still believe in that, decimated, needs to look at this. And so trade laws and trade rules will get redefined. And again, it's a question of time. So when we look at investments specifically, we have to look at Chinese growth. And one reason we look at China investments, looking at domestic industries that benefit from domestic growth in China, whether it's consumer or tech or education or health, which is one of their fastest growing areas, is because those are not going to get impacted. Doesn't matter how the trade disputes go on, that's where we invest in China.
Afsaneh Beschloss, thank you so much. Great to be with you.
Thank you, David.